So we have a massive problem on our hands that experts believe is only going to get worse because as of right now, we have a banking crisis. We are in the middle of a banking collapse right now. And I talked about this just the other day. We were learning that federal regulators, they closed a Philadelphia-based First Republic Bank. This is the first U.S. bank failure this year. But according to experts, they believe we are going to see hundreds of additional banks fail in 2024. Now today I want to explain why. Because a lot of people over the past couple of days where I've done videos on this banking collapse, they've been asking questions like, well, is my bank safe? Is my money safe? Because I don't have $250,000. I'm not over that FDIC insurance limit. So I'm safe, right? Well, the answer is no. Just because you only have $5,000 or even $500 in the bank, you could have $50,000 in the bank. It does not guarantee you are going to get your money. And I'll explain why. But just a heads up, the FDIC insurance fund only has a little bit of money. They have a fraction of the deposits that we have here in the US. So it is troubling. I'll explain more on that in just a moment. All I ask is one thing. It takes 2 seconds. Go ahead, hit that like button if you enjoy these daily updates. And now let's begin. So we know more banks are going to fail. But why are they going to fail? This is the real question I've been getting. Well, there's multiple reasons why. And I want to explain some of these. Now, banks have been having issues for the past several years. And one of the things that the Federal Reserve did in order to help banks out is they created a new program. They created something called the Bank Term Funding Program. This program was, banks absolutely love this. Okay, I believe from July to October of 2023, banks racked up borrowing about $110 billion. From November of 2023 to today, they've racked up an additional $51 billion. So in total, they had about $161 billion in lending that they borrowed. Okay, here's the problem. The Federal Reserve, they yanked that emergency funding program from these banks. It got too popular, too quick, and especially for small banks, this is something that they were utilizing to the fullest. Now, they have to pay that money back. And here's the reason why this is concerning. Okay, all these banks, and this started back in 2020. Okay, just to give you an idea, where the Federal Reserve decided to cut the reserve requirement for banks to zero. Meaning, if you went to the bank and you deposited, let's say you deposited, $400, deposited $400, the bank previously would have had to save a little bit of money. They take that $100 and they'll put it over here in the bank. The other $300, they can go and loan it out to Jimmy and to Frank and to Bob's Burgers, and they can loan that money out. But here's what they did. By the Federal Reserve coming in and saying that, no, you don't have to have any of your customers' deposits on hand. They got $400. You go to the bank, you give them $400. They take that $400 and they give it to whoever. Give it to Jake for he wants to buy the new Lamborghini. Okay, here you go, Jake. Go buy your Lamborghini. And then when payments stop coming in, then it creates a real crisis. Well, here's what happened. These banks were counting on the Federal Reserve to provide this the Bank Term Funding Program, okay, to get them over the hump, to get them through the tough times of the year. The Federal Reserve did that. But then the banks were relying on the Federal Reserve to start cutting rates. The Federal Reserve has not done that yet, okay? So as of right now, the federal funds rate is 5.25 to 5.5%. Banks were struggling when it was even at 4.5%, 4%, 3.5%. And then we keep raising rates, and now it's all falling apart. But here's something you may not know. What we are facing right now is a big problem, because it's not just the big banks. It's not just the commercial banks. It's not the big, JP Morgan. It's not Chase Bank. It's not, Bank of America. It's a lot of those regional banks, the smaller ones. But they have to be gobbled up by the bigger banks. This is what we saw, years ago as well. This is what we saw just the other day, okay? Where Republic Bank, Republic First Bank, they got picked up by Fulton Bank, okay? So keep that in mind. These bigger banks are going to have to pretty much gobble up the assets and the liabilities of the other banks. And so we're just going to transfer it to somebody else. But here's a problem. These banks that have used and borrowed the $161 billion from the bank term funding program, they have about 10 months. And all this ended on I believe March 11th of 2024. So about a month ago. So all this ended on March 11th. They have about 10 and a half months to pay this back. Okay? So if you wonder why you're 10 days late on a car payment and you get a call from the bank, that's why. They need their money. If you wonder why you're 7 days late on a mortgage payment and you get a call from the bank, hey, are you going to make a payment this month? You missed your payment date. We're really concerned, whatever, right? Yeah, they need that money. What about when you miss about 2 or 3 credit card payments? Yeah, pick up the phone because they're calling. They want to know, when are you making that payment? The bank needs your money. They need cash just as much as we do. And I bring this up because when you go down to your local bank and you say, yeah, I'm planning on making a large purchase. Can I take out $10,000 today? And then they tell you, well, sorry, we have a limit. You can only take out $1,500 on a day, but you can make a request and we can have extra cash delivered tomorrow. And so you do that and you show up the next day. Okay, I'm here for my $8,000 in cash. Oh, sorry, we can't actually give you $8,000 in cash, but we do have we can do a wire transfer. We can do a cashier's check. Would that help? And they try to talk you out of cash. They don't want you to take cash because the bank needs it. The bank needs it. But keep some of these things in mind. Okay? Here's what's going on, and this is why many people believe this banking crisis is coming. Now, I just want to warn you, as of right now, the one bank that many people are discussing, and I don't know for sure, okay, so just keep that in mind, is Wells Fargo. Wells Fargo is a very big bank. Wells Fargo has a lot of customers, have a lot of money on deposit, have a lot of assets. They also have a lot of liabilities. But here's the thing. Many people are discussing Wells Fargo it's going to be the next big bank that fails, and it could potentially be this year. I don't know for sure. Okay, that's just what a lot of experts and some economists are saying, is Wells Fargo seems to be the one that's poised to collapse. I've talked about Wells Fargo in the past, never actually named them or said them by name, but I've had issues with them in the past. Okay? And so I don't have any money in Wells Fargo. I used to. Have multiple accounts. I don't anymore. Okay? I'll leave you with that. But here's what experts are saying. That people realize that they overpaid for cars over the past year to 2 years. So now they're not paying on their overpriced cars because they realized that their loan is higher than the value of the car. So because of that, they're just going to let the car go back to the bank. They are going to get hit with their credit scores are going to get hit. Oh well, but then they are now going to have some money that they can go and buy pretty much the exact same car for less than what they owned on it previously. And yeah, maybe their payment is going to be about the same, but guess what? Over the course of the loan or whatever, they think they're they're in a better situation because they're buying the car at a less price. Interesting, but people are not making payments. We're also seeing credit card users skip payments in hopes that the banks are just going to forgive some of their loans. Banks used to do this during the pandemic. Banks were doing this left and right. And why not? Banks are, forgiving a loan because they expect you're not going to pay it. You don't have the ability to pay. It's not just that. Businesses, they're not refinancing their commercial properties. And this right here is seen as the biggest culprit. This is what's going to take down several banks, large banks as well. Now, this, the no credit card payments, no auto loan payments, not refinancing commercial properties, those are troubling, to say the least. But then on top of that, if businesses are not hiring, businesses are not wanting to grow, businesses are going to start laying off employees. And once people start losing their only income source, I guarantee you, these missed payments that banks are seeing, this is going to be a very common occurrence. We're going to see this more and more. So we have a problem. This is a massive problem. And I told you, FDIC insurance is there to pay every single account holder. So they ensure that up to $250,000 in your account is safe. Well, I have some numbers for you. FDIC insurance will bail you out if you have less than $250,000 in your bank account. But if all banks fail, which is highly unlikely, okay, there's a 99.9% chance that all banks here in the US are not going to fail at the exact same time. So, listen to these numbers. FDIC only has around $122 billion in their fund. $122 billion. That's a lot of money. Okay? But in the US, we have more than $17.4 trillion in deposits as of January 2024. And I know most people are going to say, well, that's not a big deal because there's people like Elon Musk and Bill Gates and Mark Zuckerberg who have billions and billions of dollars in their bank account. Obviously, they're mostly not going to be insured. Here's what I can tell you. Based off of the reports, based off the Federal Reserve out of St. Louis, they say there's 860 million deposit accounts here in the U.S., not including retirement accounts. And out of those 860 million deposit accounts, how many of those have more than $250,000? Well, 0.8% of accounts have more than $250,000 in deposits. That means 99.2% of accounts have less than $250,000 in them. That means 99.2% of accounts could be screwed. So, I'll leave you with that, but just understand, as of right now, experts predict hundreds of additional banks, both large and smaller regional banks, will collapse, most likely this year and next year in 2025. So, that's what I have for you guys today. As always, as I know more, I promise, I'll come back on and share all latest news and updates, but that is what we know as of today. So again, thank you guys for watching. Consider subscribing. I'll see you guys on the next one.